COVID-19 cases are rising across the country, which means small business owners still need relief. To provide some, the SBA recently raised the amount you can borrow under their Pandemic Economic Injury Disaster Loans. Now small business owners can borrow as much as $2 million. Before, it was capped at $500,000. The government wants small business owners to use these loans to weather the pandemic, but there's other benefits to applying. I'm Donna Fuscaldo. I'm a senior finance writer with business.com. Today, we're interviewing Ben Johnston, Chief Operating Officer at online lender Kapitus, about why the SBA raised the loan limit, what these loans can be used for, how you can apply, and the quickest way to get funding. Hey, Ben, thanks so much for taking out the time today.
Hi, Donna. Thanks for having me on.
So the SBA recently raised the amount you can borrow with their disaster loan program. What's going on? Why are the SBA raising it now to $2 million from $500,000 and not like a few months ago?
It's an interesting question because if you go back in time, originally the EIDL program was designed to assist small businesses who are suffering from natural disasters. And when they put that together, they had a $2 million limit established. Then going into the pandemic, when the pandemic was considered a natural disaster and qualified businesses who were suffering from the pandemic were then able to access the EIDL, they actually cut it down to $150,000 early on in the program, largely, I believe, because of overwhelming demand for the product and desire to get dollars into the smallest of businesses' hands first. If you recall, the PPP program had some fits and starts in the early days where large businesses seemed to suck up all the PPP money, shutting out small businesses. So I think that they cut the deal size down originally to try to address those smallest businesses. But now that we're recovering, they have sort of incrementally raised it back up. Last spring, they raised it to 500,000, the max deal size. And now they're kind of returning the program to where they were originally at the $2 million mark.
Do a lot of small business owners take advantage of this program before the pandemic and even now, or is this something they're not really paying attention to but should?
Well, I mean, it's interesting. I would say that the vast majority of small businesses thought hard about whether to take PPP money. And many of those, while they were thinking about, what was available to them in the PPP program, started to learn about the EIDL program. And then many of them took advantage of it. But if you look at the relative sizes, about $800 billion was issued through the PPP program. And so far, maybe a little over 200 billion has been issued with pandemic related relief through the EIDL program. So certainly more small businesses took advantage of PPP, but 3.7 million small businesses did take advantage of EIDL as well. So it's been a pretty successful program, I would say.
So what are the benefits for applying or taking out an EIDL loan opposed to a bank loan? What makes this way more attractive for small business owners?
Sure. Well, first, the term and the rate are pretty attractive. This is a 30-year term at a 3.75% rate for small businesses and a 30-year term with a 2.75% rate for nonprofits. And your payments can be deferred for the first 2 years. You will accrue interest during those 2 years, but you don't have to actually be making payments during that time. So from a rate standpoint, and term standpoint, this is a very attractive loan, something that small businesses are unlikely to be able to match, in the private sector.
What can the funding be used for? Are there specific criteria you have to meet, like PPP?
Loans can be used as working capital to pay general operating expenses, payroll, rent or mortgage payments, utilities, the purchase of equipment. You can even repay some forms of commercial debt and federal business debt. So it's similar in terms of the PPP program, which allowed you to basically pay for any operating expenses that you had in the business. This is similar. What's interesting here is they very explicitly say what you cannot use it for. You can't use it to start a new business, and you can't use it to expand your current business. So this isn't supposed to be government money going to investment capital for the business owners. It's really going to make payroll, cover your general expenses, and recover from a disaster.
Are these loans easy to get? Do you still need a good credit score, years in business, profitability, or is this for any small business owner?
Well, I think the SBA going through the underwriting process takes a very hard look at who is going to qualify and does do a thorough underwrite of the business. So, basic qualifications here: the business must have suffered working capital losses during the pandemic. So they're going to go back and look at your financials from 2019 before the pandemic and compare 2020 and 2021 to make sure that you truly have suffered. You must be a U.S. business. You need to be physically located here. You must have 500 or fewer employees per location, no more than 20 locations. And for loans up to 500,000, you must have a minimum FICO score of a 570, the business owner. And for loans greater than 500,000, the business owner must have a minimum FICO score of 625.
Are these loans paper intensive? Do you need a lot of documentation? Is it a long process, complicated, and does it take long to get funded?
They've been very specific around how long the underwriting process should actually take. And so they've said, once you submit your application for less than $500,000, they're expecting to be able to make a determination and deliver funds within 3 weeks. And for those applying for more than 500,000, that goes out to 6 weeks. In terms of what you're going to need to provide in order to apply, businesses are going to need to provide historical revenue, cost of goods sold, and other expenses, including your debt obligations and things like that. So generally, that means be prepared to provide your historical business tax returns and your financial statements. And then if you're applying for bigger loans, the qualifications go up. So over 500,000, you're going to need to provide a schedule of liabilities of the business, a list of all real estate owned, and a summary of the owner's personal finances. And it's important to note the real estate for over 500,000 because the SBA will file a lien against both a UCC lien against your business for all amounts greater than 25,000, but they'll specifically file liens on your real estate holdings if you're taking out a loan for greater than 500,000.
Good to know. What do you say to small business owners who are like, this isn't worth it? I don't have the time to gather all my financials, deal with the SBA, or is it something that they should, if they need funding, is it something that they shouldn't ignore? Should they do the hard work?
Sure. I mean, if you continue to suffer from the effects of the pandemic, I would say you really have 3 more months to access this program. The program expires at the end of 2021. And again, it's probably the lowest cost funding that is going to be available to you in the market today. It's at 30 years, it's quite a long repayment period at a fairly low rate. And so this can really be an opportunity to help secure your business and prepare to emerge from the pandemic in a stronger position than you would have otherwise. So I would say if you qualify, I would really encourage businesses to take advantage of this opportunity.
Excellent. So finally, what are some tips you have for business owners to speed up the process or get the ball rolling on applying for this loan?
Sure. Well, I think the application process should be fairly straightforward. You apply online on the SBA's website. I would just make sure that you have all of your historical tax returns and financial statements for your business going back to the beginning of 2019 on hand. If you're applying for larger loans, make sure that you have all of your proof of real estate holdings and other financial holdings, your assets and liabilities in a format that can easily be uploaded to the SBA. And just be prepared to go through a lengthy questionnaire asking you a number of things about your business, some of which may not be relevant to you, but there will be an extended questionnaire that you'll need to manage.
Great. Well, this was awesome. And I guess the key takeaway is do not wait. You only have 3 more months left. So I want to thank you so much for taking out the time today.
Absolutely. My pleasure. And thank you for having me on.